I think one of the more interesting announcements in the last week was Figma puts out there in their S1 as they're filing for an IPO that lo and behold, they have about 5% of their balance sheet in Bitcoin. And here's a private company, not trying to be a Bitcoin Treasury company, right? But realizes the thing that we realized in 2020, that Bitcoin on your balance sheet is better than cash on your balance sheet.
Welcome to the Bitcoin for Corporations show. My name is Pierre Rochard. I'm your host today. And today we're joined with Phong Le from MicroStrategy, or Strategy now, rebranded. So welcome, Phong. Thanks for coming on.
Pierre, it's fantastic to be here. Thanks for having us.
Yeah, great to see you again. We had a good conversation in Las Vegas up on stage. That was a lot of fun.
Yeah, that was nice to have David Bailey up there. A lot of big announcements with new Bitcoin Treasury companies a month ago or so.
And the most recent announcement for Strategy is with regards to STRD, Stride, the perpetual preferred that is now is the third one, I believe, that has an ATM. So I'm excited to dig into that. But first, I want to start with a little bit of history for those listeners who are not familiar with Strategy and not familiar with the Bitcoin journey that the company has gone through over the past 5 years now. So congratulations on that landmark of 5 years. It's a long time in Bitcoin. So I really want to start with what MicroStrategy was in 2020, where it was from a corporate perspective, and kind of just briefly what led to the decision to acquire those first Bitcoin.
Yeah, it's a long story, and you're right. It was 4 years and probably 10 months and 29 days ago that we embarked on the Bitcoin Treasury company journey. And I've been with Strategy since 2015. I became CEO in 2022. And Michael Saylor, our founder and now executive chairman, founded the company in 1989. And so when I joined, and certainly when he founded, the idea was not to start a Bitcoin Treasury company. The idea was to run a great enterprise analytics software company. And we did that for the course of 30 years or so. And in 2020, after running a business that was profitable, that was revenue growing, $500 million in revenue, given any given year, 15, 20, 25% operating margins, which were also our EBITDA margins, which were also our cash flow margins, because it's not a very capital intensive business. So you're $500 million a year generating $100 million in cash flow. It was a good business, but it wasn't growing at the pace we wanted. And we're competing in the enterprise software world with the Microsofts and the Amazons and the Googles. And on the startup side, some of the most smartest, most brilliant people in the world. And the great thing about enterprise software is once you're able to convince a customer that you have something that's accretive to their business, they stay with you for 20, 25, 30 years. So it's economically a very sound business. It's a very competitive business, and it attracts some of the smartest people in the world. And as a result, it's extremely competitive and difficult to grow in. And so that's what we're doing. We're stagnating a bit in 2020. We still had great customers. We serve about 50% of the Fortune 500 as an example. And COVID hit, and we had $500 million of cash on our balance sheet. $500 million in revenue, which is very conservative balance sheet management. We had previously bought back stock with our balance sheet. We previously acquired small niche companies with our balance sheet. We funded growth. We did all the things that you see companies doing today to try to grow their business in highly competitive environments. And COVID comes around, and we were earning at that point in time about 125 basis points, right? We were basically invested in short-term treasury bills, and the overnight rate was around 225 basis points. And one of the first things that happened with COVID is the Fed decided to, I think appropriately so, cut the short-term interest rate to zero. And so we went from earning $12.5 million a year on our $500 million to zero. And that was a pretty stark, wake up call that the $500 million in cash wasn't working for us anymore. And then the second thing that happened, and you recall it well, and many in the Bitcoin world recall it well, is the US government and governments around the world decided to stimulate their economies. And over the course of about 3 months, from April to June of 2020, the Fed printed about $5 trillion on a $20 trillion monetary supply, right? I remember receiving my COVID checks in the mail. Didn't really need it, got $1,000. And, it became very obvious that when you take a $20 trillion monetary supply and you print $5 trillion, that our $500 million was going to be worth 25% less, right? And so no longer did we really have $500 million, but we had $375 million. So 500 million earning 12.5 million and worth 500 million to 500 million earning zero, worth 375 million. And that was really the wake up call for Mike and the board and I to say, okay, what should we do? What really should we do? This is a crisis beyond COVID, a crisis beyond a worldwide health crisis, but we now were facing a macroeconomic crisis, and for our business, a cash crisis. And like any good technology company, like any good engineers, Mike and I both have engineering backgrounds. Like any good technologist, we said, let's invent our way into a new solution for our balance sheet. And that's how on August 10th of 2020, we came to announce that we were going to use Bitcoin as our primary treasury reserve asset.
And obviously, a lot of corporations hold cash on their balance sheets, so they might have faced the same problem, but not had the same reaction that you had. And do you think that maybe the standard reaction is to say, well, it is what it is. It's cash. It's supposed to lose value. We're just going to hold it anyway. It's almost just accepting the status quo.
Yeah, you go into you can ask. Probably the first question is, why did we have $500 million in the first place of cash in our balance sheet? Because our investors at that point in time and traditional capital market theories, or our bank advisors at that point in time, would have said, well, you should put that $500 million to work, right? And, we had fully invested in the technology behind our software business. So there wasn't an opportunity to say, well, let's go hire, right, another 1,000 people. And let's really, supercharge the software business. We're mature, right? Like if we were a startup, maybe that makes sense, right? So that's usually option one is invest further into your core business, and we were fully investing in our core business. Option two then is to look at M&A or acquisitions, right? And especially in the software world, that can be quite popular. You see, large companies like an Oracle or a Salesforce, that is a big part of their strategy. Mike and I both come from a place where ultimately a software company's core product, is the technology, it's the engineering behind it. And what you tend to find is when software companies acquire other technologies, is ultimately not accretive to the software. It's not accretive to the customer. It's not accretive to the employees even. Right. If you look at our competition over the last 20 years, think of a company like a Business Objects or a Cognos. They were acquired by SAP and IBM respectfully. Guess who did well during those acquisitions? The shareholders did okay, right? The executives did very well because they started to develop a kingdom, get paid more for the larger the company, the larger the market cap. But the software didn't do well. Business Objects, Cognos are practically end of life. The people who have that software have moved on to different things like strategy or some of our competition. So the M&A thing in technology and software typically doesn't work, right? Like it's different if you take two manufacturing plants and you put them together, you get economies of scale. You are able to drive down your vendor costs. It's a great thing. But in software, it doesn't work. So the idea of going and acquiring, a business wasn't a great idea, right? And then obviously the other thing people say is, well, go buy back your stock. And what we found over the course of 10, 15 years is, yes, you can buy back your stock. You can return the cash to your shareholders, but it doesn't really do much to your stock, right? And there's a lot of history and analysis of whether stock buybacks actually are accretive to the equity in the end game. And generally speaking, it's not, right? And so those are all traditional sort of theories of what to do with your cash. And so what do? We just held it for a rainy day, right? Like, and we kept it in the most liquid thing you can have it in, which is either cash or short-term treasuries. And so you'll start with the idea of what to do with our cash was, generally speaking, non-traditional. And if you look at really large companies that are out there, a lot of them tend to want to hold and hoard a lot of cash, right? Berkshire Hathaway is a great example, but even if you look like an Apple or a Google, they hold more cash than you would traditionally do, or traditionally hold in a company of their size. We're like that too. And the reason is you want to have a large balance sheet to give you ultimate flexibility and the ability to weather storms. COVID was a storm, right? Like I'm sure some of the travel and leisure companies, hospitality companies, wish they had a lot of cash at that point in time. You look at the opposite, and you look like an airline, right? They load up on their debt. They don't have enough cash. When travel is going well, like it is now, they serve food. They put the olives back in first class. You get free pretzels and coach. You don't have to pay to bring your bags on board. And then when a downturn happens, because they load on the debt up on debt, and by the way, they load up on debt, and then they actually buy back shares with the cash they have, right? Guess what happens in a downtime for an airline? You see it happen every single time. They cut flights, they take the olives out, they make you pay for water, and they don't let you check bags anymore. And so
And
if you're running an
sometimes
airline, it goes
they
up
even,
and down and up and down. And so, of
yeah.
course, you want to have a lot of cash, and technology companies can do that. It's a long story, but cash is king. You want to have cash on your balance sheet. You want to have the optionality. And up until now, the only thing that you could invest in on your balance sheet that gave you the kind of liquidity and the access to your capital was cash and short-term T-bills. And now you can invest in a commodity called Bitcoin that is extremely liquid, right? And that returns 20, 30, 40% a year. There's been nothing like it before. And it's really revolutionized the way people think about balance sheet management, and they think about holding capital on their balance sheet. So the problem always existed. It forced companies that were undercapitalized to make bad decisions. It forced companies that overcapitalized to hold their money in something that was underperforming, short-term T-bills. And Bitcoin is the answer. Now, why haven't more companies done it? Because they haven't figured out that Bitcoin is the answer. There's how it is, Pierre, and I hear folks talk about on your podcast and others. We're still early. Like maybe 1 in 10 people that I talk in my circles even want to talk about Bitcoin, right? Oh. And imagine that they all know what I do for a living. They're all fairly intelligent, highly educated, wealthy people. And the ones that want to talk about Bitcoin in my circles, my parents, like folks who don't have a ton of capital, who don't have access to a lot of cash. Like the people who need Bitcoin, the 1 in 10 are typically not the overeducated, overcapitalized folks. It's the undereducated, undercapitalized folks that want to talk about Bitcoin. Everyone else is tired of hearing me talk about Bitcoin in sort of my sort of family and friends group.
Yeah, it's as Saylor says, a need to know basis.
Wish you could access cash without selling your Bitcoin? Ledn is the global leader in Bitcoin-backed lending. They've issued over $9 billion in loans since 2018 and never lost a single Satoshi of client assets. A Ledn loan is different. With custodied loans, collateral is not lent out to generate interest. No credit checks, funds in under 12 hours, with proof of reserves reports published every 6 months. Ledn gives Bitcoin holders a secure and transparent way to unlock liquidity without selling. Learn more at ledn.io.
So you mentioned that you were holding cash for kind of the option value of it, that flexibility that it offers. And so when you swap the dollars for Bitcoin back in 2020, you still saw that as long-term optionality, that this is providing flexibility in the future, and without the currency debasement of the cash, and now you've got a long-term treasury asset that has that same option flexibility value, plus the increase in value from the Bitcoin network adoption and the tailwinds that has as an asset. But that it wasn't quite that today's approach of, oh, we're going to also issue capital markets instruments that are ultimately powered by Bitcoin. How was that journey? And would you call it a transformation or just a discovery of new opportunities along the way?
Yeah, so I think you're right. The analogy of the option value of holding cash in your balance sheet is a lot different than the analogy of the option value of holding Bitcoin on our balance sheet. I'll start with when a software company or generally an operating company holds cash on their balance sheet as an option value. It's to be opportunistic, right, to acquire or to invest at the right time, or it's also to be defensive in case there is a major shock, macroeconomic, geopolitical, or competitive. And in many industries, the competitive shock can come out of nowhere. And rather than then having to raise money on your heels at a time where the cost of capital would be very high to the company because it's facing some of these shocks, you want to just have the cash available. So that's sort of the traditional way that I think a lot of well-capitalized growing companies think about cash on their balance sheet. When we decided to put Bitcoin on our balance sheet, the primary reason was it was liquid, it was novel, it's an excellent technology, and the risk return ratio or the return risk ratio is asymmetric, right? And that was the primary reason we started this. Did we know that we would really then create, a market for Bitcoin-backed securities? Right, and do it in a way that gave people access to Bitcoin via the public markets, the public equities markets, and now the public debt markets? No, we didn't know that was what was going to happen in August of 2020. We started to discover that was going to happen when we realized that we could raise capital, and this was in December of 2020, at very accretive rates. Right, we did our first convertible note for about $625 million in December of 2020, which was really only, at that point in time, 4 months after we launched a Bitcoin strategy. Our equity had appreciated 3-4 times, right? And we were able to raise money at, I think at that point in time, it was 65 basis points, right? And up 35%. And we went off on the back of that in February 2021, and we did the same thing, $1.05 billion, 0% interest, up 50% on the equity. It was the most successful convertible note that had ever been launched. One of the 3 most successful convertible notes ever launched in the last 5 years, and the second ever launched with the explicit purpose of buying Bitcoin. And did we know in August that we were going to do that? No. Did we know that when we, launched the second convertible in the first quarter of 2021 that we're going to go off on the back of that and raise, about $600 million in secured notes? We started thinking about that. Did we know that right after that we're going to raise another $250 million in a margin loan through Silvergate? No. And we certainly didn't know in 2021 that we were going to enter the preferred market. But we started to discover along the way with our banking advisors and with the help of AI and ChatGPT that there was an entire market of Bitcoin-backed securities that was to be created and a huge demand for these markets. And as Bitcoin became to, more legitimized by the U.S. government in 2024 and nation states and by other Bitcoin treasury companies, we started to realize that the entire equity market and the entire debt market has a huge opportunity. And there are people out there who want access to capital that's backed by Bitcoin. And when you back capital by Bitcoin, it's such a novel commodity that you're able to build securities that have never been built before, at returns that have never been built before, and that are accretive to us, the corporation. So no, we didn't know what we were getting into when we launched in August of 2020. But like any entrepreneur, inventor, technologist, some of the things we knew we were getting into, which was starting with Bitcoin on the balance sheet. And then you have to be agile. You have to have the team, the place, the leadership, and the willingness, the guts, to go do it. And that's what we did.
Yeah, and the shareholders as well, because I remember that you did a tender offer to make sure that you had the shareholder base that really was voluntarily participating rather than kind of being dragged along.
Yeah, we took the 200, the 500 million or so of cash on our balance sheet, and we did a Dutch tender of, I think at that point in time, $275 million. And we said to our shareholders, our share price at that point in time was 12 and a half bucks split adjusted. It was $125, but we'll call it 12 and a half after the 10-for-1 split. And we told everybody, look, if you want out, we're going to do this digital asset thing, right? And if you're not interested, that we're going to allow you to go ahead and tender your shares at a 15% appreciation. So you'll get 137 bucks or 138 bucks. And we were very prepared to fill up the entire $275 million book and give that back to our shareholders and appreciation. And the end result was about $65 million of shareholders tendered their shares. I'd say Mike and I and the board were quite surprised, pleasantly surprised, and everybody else who was part of our company. And back then, our market cap was $1.5 billion. Our enterprise value was $1 billion net of the cash. But of $1.5 billion, about $65 million worth of shares were tendered. Everybody else said, I'm in for the ride. And I think they were happy they stayed.
Right. And so you plug in Bitcoin into the balance sheet, and that was, I think, at the front of the bull market, in 2020. Bitcoin's price appreciates. That creates it's by the transitive property almost upward volatility skew for MSTR's share price, and then that creates the opportunity for a well-priced convertible. Is that fair to characterize that timeline?
That's right. We bought our first tranche of Bitcoin at an average price of about $9,500. We bought about $600 million of Bitcoin in the first 3 months of an average price of 11,000. Coincidentally, it was $11,111.11. That was not on purpose. And when we did that, you're right, by the end of 2020, Bitcoin price at that point in time, I think was about $30,000. And so that appreciation of 3x of the $600 million meant that we would have a $1.8 billion Bitcoin value. But then to your point, demand for the stock increase, our shares priced up. We saw, 3-4 times NAV at a certain point in time. And with that, the opportunity to raise capital at very attractive valuations. And so absolutely. It also happened to be, if you remember the end of 2020, early 2021, sort of post major downturn in the markets, COVID, a increase in markets again as people started to understand what COVID was doing in the markets, especially with technology companies and healthcare companies. Valuations went up, and so access to capital via especially the convertible bond market was strong, and so we I guess we took advantage of strong interest in Bitcoin and an increase in Bitcoin price, a general bull market with technology and healthcare companies, and opening up of the credit markets and opening up of the equity markets, and the fact that we were becoming very interesting and unique, and other companies were starting to follow us, right? PayPal and Block and eventually Tesla in the first quarter of 2021. And so it was the combination, the confluence of all these events, not too different than where we are today, by the way. Between November and now, we're in a similar market environment. And so what you're seeing the Bitcoin Treasury companies take advantage of today was similar to the market conditions that we had taken. The only difference, or the big difference, was getting a bank to underwrite what we were doing was extremely difficult because of their risk profiles and the lack of knowledge of Bitcoin. And so that was a difference in terms of market conditions. But otherwise, outside of Bitcoin, the equity markets and the capital markets were strong back then like they are now.
So the reason why I really want to look at the origin story, because I think it helps people understand where this concept of an NAV multiple comes from. Because today it seems like some commentators view it as almost alchemy and that it's too good to be true. But establishing kind of the history of the company, I think, helps clarify where that's coming from. So how would you describe the NAV multiple and what its reason to be is?
I'll start with there are many companies outside of Bitcoin Treasury companies that trade at a multiple to what you might consider their net asset value, right? And if you take a traditional company, a net asset value would be a combination of the assets on its balance sheet and a discount on the sort of earnings projections, right? And so if you're to combine those two things, right? I was just talking to folks at one of the banks that we work with, Morgan Stanley, right? They trade at a multiple. I don't know exactly what it is, but it's 1.5 to 2.5 times their net asset value, right? And so why does a company like Morgan Stanley trade at a multiple net asset value? Well, one, you may believe that the earnings potential is growing at such a rate that whether you look at 1 year, 5 years, or 10 years out, you think the potential is greater than that. You might also believe that they have a distinct competitive advantage, right, in the market that they're in that is not showing up in a cash flow projection. You might also believe that their management team is unique and is strong. And so you take all those combinations and you'll say, look, this is the asset value, but we're going to put a multiple on that of 2-3 times, right? You see that happen, by the way, all the time with high growth tech companies, right? You might value them, especially early stage, but middle stage too, at multiples over their asset value, right? You see that happen with a Microsoft when they come upon AI, right? You might build a projection of the revenue and the cash flows from that. And you might say, but you know what? I'm going to value it at even greater than that, right? So this concept of companies being valued greater than their asset value or greater than the discounted cash flow is not an uncommon thing, which is why then people say, hey, maybe I should value high growth companies as just a multiple to revenue, as a multiple to EBITDA. And I think that's a very reasonable thing. And then what do? Rather than take net asset flow value or discounted cash flow, you take an EBITDA multiple and you look at all the peers and you say, everyone's worth 20x. These guys, I'm going to give 30x because I believe in them. And you've thrown away, the spreadsheets and the cash flows, and you say, let's just take a look at the peer group, right? And let's say they're in a really hot, sexy industry. They're doing AI and, throw away the cash flows, throw away asset value. I'm just going to take a multiple of EBITDA and I'm going to give them a 50x multiple, right? I'm Palantir. I don't really care what they're doing in their business with AI, and I don't care about what their revenues are. I'm going to trade Palantir at 50x revenue, right? So this is not unique to Bitcoin. First of all, the idea of a multiple to net asset value. And so people call it alchemy. I call it valuation, right? And every bank and everyone who's been to, business school or studied corporate finance realizes that there's a time when the traditional models don't work, and you have to come up with a different way to value a company, right? Our belief is a good way to value the company is take the Bitcoin yield, right? And then take the Bitcoin gain, which is a function of Bitcoin yield. It's a dollar gain, right? It's sort of like an earnings, right? And take a multiple on that, right? And so we've projected, right, that this year, right, our Bitcoin dollar gain is going to be in the $25 billion range. And if we do that and you take a typical EBITDA multiple or an earnings multiple and you say, hey, what's the company worth if they had produced $25 billion in Bitcoin dollar gain? Well, perhaps you'll put a 20x multiple on that. But what if that number is growing 50% a year? Should you put a 30x multiple on it, a 40x multiple? It's not unreasonable. And you would value strategy there then somewhere between, right, $500 million, or sorry, $500 billion and $1 trillion. And then you can go back and say, well, that versus our net asset value of 60, right? Maybe we should be at 10x NAV or 20x NAV, right? So it's not alchemy. This has been happening since the beginning of corporate finance and equity valuations. There's got to be a different way of looking at the enterprise value of a company than just looking at a straight, what is the asset value that it's worth, right? And so that's I think it's very reasonable. And then it goes back to the same thing you do with a technology company, right? What's the potential for earnings growth? Do they have a competitive advantage? And do you believe in the management team, right? Do you believe in Mike and I, right? Do you believe that having 3% of Bitcoin in the world, right, and having more Bitcoin on our treasury, 10x more than the next Bitcoin treasury company, do you think that's a competitive advantage? I sure as heck think it's a competitive advantage, right? And so then yeah, and then you go back to what's our earnings potential, and that's our Bitcoin, that's our Bitcoin gain.
Do you think there's a bias of, well, the tech companies, they produce goods and services. We can wrap our minds around that. That's where the earnings come from. But a Bitcoin treasury company like Strategy, they're selling a financial product and financing their balance sheet and earning or creating value from doing that. And that's not okay somehow. That selling financial products is not okay, but selling AI is good.
Yeah, of course there's a bias, but the bias is not based on anything other than ignorance, right? Like in 1985, Microsoft, somewhere between 1985 and 1990, Microsoft received a valuation that was 20 to 30 times its earnings. And, its revenue was growing 300% a year. And at that point in time, all equity analysts only knew how to do a discounted cash flow as a way to value a company. So the entire conversation we just had around the idea of a multiple on revenue and a multiple on earnings, which is today very well understood with tech companies, was a complete innovation, right? Of valuing equities in 1985. And so go back to 1985, right? Go back 40 years ago. And the same conversation you and I are having now about how to value Bitcoin treasury companies was being had by very smart equity analysts, right, on technology companies. And Microsoft was the first technology company that they decided to start to value, right, based on a earnings and a revenue multiple. It was really a revenue multiple. And it was considered a complete innovation. It was considered blasphemy in the world of corporate finance. Nobody liked the idea. They're like, how can you do that? This makes no sense. The company's making no money, right? Like I have to have a revenue. The same conversation we're having now happened, right? Like it happened 40 years ago in the world of technology valuations. And so is there a bias? Absolutely, there's a bias. But this is what, when you blaze new trails, when you pave new roads, people are going to have to come along. Now, I think the difference back then was the personal computing movement was happening. The business computing movement was happening. So everybody was very easily able to grasp, look, I've got a Commodore 64, an Apple IIe, or IBM PC, and I have it in my household. Now there's going to be one in every household. I can very quickly jump to the conclusion that Microsoft is growing at 300% a year. They're not making money. We should go ahead and give them a multiple based on revenue, right? Literally in everybody's home, right? PC in everybody's home. So when the average consumer understands it, then it's easy to do that. Today, Bitcoin is harder for people to conceptualize who aren't in the Bitcoin world. Now, we have 50 million holders of Bitcoin in the US, so those folks can start to conceptualize what Bitcoin does for themselves personally. The jump to then, why should corporations hold Bitcoin? How should they hold Bitcoin? What is the proper valuation for a Bitcoin treasury company? That's a little bit harder of a leap. But people will get there. And it took about 5 years for people to get there in the technology software world in the 1980s. I think people get there in less time now, right? And year to year, look, most folks, the people that you and I hang out with, Pierre, understand the valuation methodology. It makes a lot of sense. I think we'll get there.
Yeah, and I imagine that 40 years ago, there were Microsoft bears who suggested that it's so easy to compete, right? Anybody can write code. Anybody can, even if we look at Steve Ballmer himself, he was saying that open source software is a problem because it reduces those moats. And then we saw a change of guard. Satya Nadella comes in. It really embraces open source software. Do you think that there's a lot of narratives out there that it's so easy to start a Bitcoin treasury company, there's no moat, and that those narratives don't hold up ultimately because there are other factors that do create a moat?
Yeah, if you continue with the Microsoft sort of analogy, right? What caused Microsoft to go from being $1 billion company to a 10 to $100 billion company was when it entered the enterprise market, right? And Steve Ballmer is given a lot of credit for the one who cracked open the enterprise market and said, not only do you need a PC in every house, you need a PC in front of every employee. And if you have a PC in front of every employee, it's really Office, right? That's going to be the killer product, right? Word and Excel and PowerPoint and those products. And so going from a very challenging, often consumer market, B2C market, to a B2B market was really what unlocked the value of Microsoft. Now let's take that. And by the way, that's why we entered the B2B software market, because it's actually much more profitable. It's recurring revenue. Churn rates are very low. And it's a great market for us on the software side. Now think about what Strategy has done with Bitcoin, right? We went from Bitcoin in 2020 really being a retail product, right? Retail investors buying Bitcoin, smart folks in, at home or wherever they were, taking their COVID checks, buying, getting a Robinhood account or getting a Coinbase account or even a PayPal account and buying Bitcoin. Great. What we did is we created a B2B market for Bitcoin. And the way we did that was by securitizing Bitcoin in the form of MSTR, in the form of convertible notes, in the form of secured notes, and ultimately in the form of STRK, STRF, and STRD. Right. And so what we've done now is we've created a market that institutional investors, high net worth individuals, can invest in Bitcoin through traditional securities listed on the NASDAQ, right? And so we have uniquely created a B2B Bitcoin market for people who otherwise would not be able to get access to Bitcoin. There are mandates in some of these hedge funds and some of the portfolio managers, or it could be institutions, it could be pension funds, it could be endowments, right? A lot of them have a mandate that says they can't buy Bitcoin, right? Can't buy any commodity for that matter, right? And they can't buy ETFs like an IBIT. And so they get access to us as an equity, right? And so we have securitized Bitcoin, and we've created a Bitcoin-backed equity and debt market that gives B2B access to Bitcoin. Just like what Microsoft did in the 1990s. Their big unlock was creating a B2B enterprise software company, the original and arguably still one of the most successful, if not the most successful enterprise software company in the world. We are the most successful enterprise grade Bitcoin treasury company in the world. We have a big head start. We create a lot of trust with our shareholders. And interestingly, it's coming full circle. Bitcoin was a retail asset. It's now an institutional asset because we've opened that up. And now our institutional instruments, we're putting back out in front of retail, right? Because the fixed income nature of our preferred securities and the perpetual nature is something that's very attractive to people who want fixed income access, right? Think about people who are retirees. How did they get fixed income access today, right? Well, we can get them better returns, perpetual returns, and over collateralized products. So I think what we're doing to give institutions access to Bitcoin and the return profile they want, and now retail investors access to preferred securities that are backed by Bitcoin, completely unique innovations, and it's exciting. It's exciting to see how they're being received in the market. I'm sure you follow it, Pierre. Like the behavior of Strike and Strife, and soon, and hopefully at some point Stride, looks like unlike any other preferred security out there, right? Like Strike, since its inception of February this year, right, we're 5 months in, has traded up 50%, right? And we paid 2 dividends at 8%, and it has the equity upside of MSTR. It's like nothing people have ever seen before.
And I've heard critics say, well, look, the preferreds market is so small, but with performance like what we've seen with your securities, I imagine that market will grow. And that's how capital markets work, is that they start out small and then they perform well and then they attract capital.
The preferred market was small because the preferred products were crap. Nobody wanted them, right? Like it wasn't, it wasn't that there's always a desire for long duration, high return, over collateralized securities, whether that be in the form of a preferred security or otherwise, right? Like someone's always going to want that. Right? If I told you tomorrow that I'm going to give you 5x over collateralized 10% returns in forever, right? Would you want that? You'd say, yeah, right? Because right now people are getting 2 times over collateralized 5% returns. So, and it's called within 4 or 5 years. And so the fact that we use, the preferred market for it is a matter of convenience more than anything, because it exists. It's understood, and it's a fairly liquid market. But it's you put a great product out there, and people are going to want it.
And now, a lot of Bitcoiners, their reaction to the preferreds is, well, first of all, the end user is saying Bitcoin's too volatile for me. I think that we can start with that, which has been a critique of Bitcoin since inception, right? That it's too volatile. And that, for somebody who's young and risk seeking, that does not phase us of saying, yeah, let's accept that volatility. And then when we hear the criticism, our reaction is very defensive of, well, it's not Bitcoin that's volatile. It's the dollar that's volatile, right? Try some reverse psychology on them. That seems to not have been particularly effective. And it seems like, creating products that do address the underlying, concern that person has seems more constructive. How do you view the volatility question for Bitcoin in relation to the preferreds?
I have friends who get into some of our securities, and I'm always careful what I say and don't say with them. But one of them is like, "Hey, I bought MSTY," and I'm like, "Do you know what's in that?" They're like, "No," but I like the return. I like that it's pretty stable. And then I have a friend who bought MSTX, and which is, I think it's 3 times levered MSTR. And I'm like, so do you know what's behind that? They're like, no, not really. But, the return profile is great, and I can handle the volatility. What I would say is, when you're buying a security, you have to understand what's underlying it, or you have to at least understand the counterparty risk, right? And so if I'm going to somebody, I'm saying, hey, you might be interested in STRF, right? Strife. And it has 10% returns into perpetuity. It's perpetual. And it's senior in the capital stack to everything except the convertible notes. And it is 10x over collateralized, right? It has a BTC rating of about 10. And the counterparty is MSTR. It's MicroStrategy, right? And do they need to know that it's backed by Bitcoin? Not necessarily, because it's first backed by MicroStrategy. And we've said that, the dividends are cumulative. If we ever miss a dividend, that they'll accumulate, and you'll still get the dividend over time. And if we miss multiple dividends, we give up board rights. and you're backed by not Bitcoin necessarily, but you're backed by a company that's been public since 1998. So we have 27 years of experience in the public markets. And if you look at our equity performance, it's the best performing equity in the world since 2020, right? That's what the preferred is. Yeah, it happens to be backed by Bitcoin, right? And so sometimes Bitcoin has a marketing issue because we want to explain, everything that someone should learn in 1,000 hours, right, in about 10 minutes. And once you start with that as your goal, is to abbreviate, right, like 1,000 hours into 10 minutes, 1% of 1% of what people need to know to understand Bitcoin to try to pitch, STRF. I think that's a fool's errand, right? What you need to do when you pitch STRF is you let people know that it's backed by a company that's $100 billion, that has $65 billion of assets on its balance sheet, right? And is has issued about $1 billion, 500, 700, about $1 billion worth of STRF. We have $2 billion left in ATM facilities, so $3 billion on $65 billion of assets, right? And you're going to get a 10% return. I think that's pretty compelling, right? And do I need to explain to everybody why Bitcoin's volatile and why that's actually good, and that volatility will go down over time as more and more money gets put into Bitcoin and the market cap goes up? Not really, right? Like, who's the ideal purchaser of STRF other than major institutions? It's probably retirees, right? Like a 70-year-old individual who's retired, has done reasonably well for themselves, and they live, they have bills to pay and no income. They want a fixed income. Do I really believe I need to fully explain to a 70-year-old, I'm not trying to be ageist here, retiree, all the intricacies of Bitcoin, 1,000 hours worth of study in 10 minutes? Not really. Just explain to them why this is a good security.
Yeah, that makes a lot of sense, and that all of those cushions are preventing the volatility from hitting STRF. And what we've just observing the price in the market, it seems like starting at $85, I believe, was where it started. Now it's trading at a premium over $100. Is that the result, do you think, of the market education, or is there a supply and demand dynamic there?
I think it's the market education and it's the quality of the security, right? At par at $100, it's a 10% return, 10% yield. At $120, it's an 8.5% yield. Everyone still realizes that with all the qualities I mentioned of STRF, it's still an excellent security. It's an excellent option, right? Like 8.5 is still superior to anything you can get out there with the characteristics of STRF. And so I think it's just pricing up to what the market believes it's actually worth, right? And as Bitcoin goes up in price, we further over collateralize. The BTC rating on STRF goes up. And so the quality of STRF as a security goes up. And so the price goes up. And so you could see a point where, let's say, not 65 billion, but we have 130 billion on our balance sheet. If Bitcoin were to double, the BTC rating of STRF goes up, from 10 to 20. And the quality of that security, just in terms of the collateral, doubles, right? The collateral coverage doubles. And so STRF should continue to price up because somebody might be willing to pay to get 5% or 4% yield on something of that quality. And not to mention that our equity value goes up too, which even further strengthens STRF. So I think the market, I don't think it's a supply demand issue because we have an ATM open, right? And so we'll fill the supply, we'll create supply to fill the demand. I think people are just pricing the security at what it's worth. Look, we launched at 85. It was the second security that we launched and our second preferred that we launched. We were testing the market, right? I think the reality is when we launched it, it was worth over 100, right? But it's early in the preferred market. And you saw that with STRK, we launched at 80. With STRF, we launched at 85. With STRD, we launched at 85. I think if we were to launch additional perpetual preferreds, we could likely launch them at higher, prices closer to par because people are starting to understand what we're doing. We pay dividends on them now, twice on STRK, twice on once on STRF. Not yet, but we will on STRD. And so there's also, I think some people, believe it or not, we're sitting there saying, are they really going to pay the dividend? What we did was we raised about $50 million via an ATM, more to buy Bitcoin, but $50 million to pay the dividend last week. And, a couple of weeks ago, and people were like, okay, they're doing what they said they would do. Right. So back to, do you believe in the management team? Are they going to, we said we're going to raise money via an ATM because it's much less dilutive than just raising ATM to buy Bitcoin by itself. We'll raise money via an ATM to pay the dividends of 8 and 10% on STRK and STRF. And we did it. Right. And so there's a little bit of it's priced up at that point in time, right after we paid the dividend. People are like, okay, they're actually doing what they said they would do.
Now, it seems like there's some who believe that to pay the dividend, it has to either come out of operating cash flow or from selling Bitcoin, and that paying the dividend with new investor money is doesn't pass the smell test for some of the critics out there. What's your reaction to that from a corporate finance perspective?
Yeah, I guess I don't quite get it. I mean, and I can understand. This goes back to the traditional, finance point of view, and of sort of, non-Bitcoin backed companies, right? Non-Bitcoin treasury companies, and which is why we created additional KPIs like Bitcoin yield and Bitcoin gain. Right. And that's why Bitcoin yield and Bitcoin gain are such important KPIs for this world. It's basically, are you increasing Bitcoin per share, and are you doing it with velocity, right? Are you growing Bitcoin per share, the rate in which you increase? And I think people have become reasonably comfortable with the idea of issuing equity at a premium to net asset value to buy Bitcoin. Right. Like I think our shareholders, I think Bitcoin Treasury company shareholders, and I think in general are getting comfortable with that within the Bitcoin world. Right. Like outside the Bitcoin world, I think some folks still don't quite understand why that would make sense or why there's the dislocation, which we talked about earlier in Bitcoin and MNAV. Right. And so I think in the Bitcoin world, people understand why it's accretive to issue equity at a premium to net asset value to buy Bitcoin, right? And so, and by the way, when we started doing that in 2021, there's a lot of consternation, and people started seeing it, right? So now the idea, the new idea, is if you can issue a preferred, which is non-dilutive, right? It's non-dilutive to common equity holders, and you're able to issue a non-dilutive instrument and pay 8 to 10% yield on it. And therefore, the only part that's slightly dilutive is issuing equity to pay the 8 to 10%. And that's better than issuing equity, right? And that's why we came up with additional KPIs like Bitcoin torque, right? But even Bitcoin yield, if you just calculate the Bitcoin yield on a preferred, and it sort of makes sense conceptually, right? Like you could issue equity at a 2x premium, right? And you're capturing that 50% more, right? Or you could issue a preferred at 2x premium and pay 10% per annum. And so you're capturing that 90%, right? So you're just basically any Bitcoin we buy and any incremental value creation on the Bitcoin going up is more accretive in a preferred, even by using the ATM, right? And so it just mathematically works out. You can put in a little spreadsheet. You've seen some of the KPIs we put out. We talked about it ad nauseum, I think, in our Q3 earnings call. Actually, I think it was our Q1 earnings call. But we talked about it in detail. Mathematically, it just makes sense why it's better to issue equity to pay a dividend on a non-dilutive preferred than it is to issue equity on an ATM. Now that's on a micro basis. On a macro basis, they're both important instruments. You want to have a reasonable amount of debt and a reasonable amount of equity, and they work together, right? So, we have capacity for that. We'll talk about 20, 30% with something that's, STRD, maybe even more. But you can't just go issue debt forever without having equity to collateralize it. And so both are important instruments. So it's not like a one or the other.
Right. And so if we look at the math, it's really that we expect Bitcoin's growth rate into the future to, on an average basis, to be greater than the cost of capital, the cost of the perpetual preferreds for the company. And the critic would come up and say, "Well, look, there's no guarantee that Bitcoin's value is going to increase." So, what gives confidence in Bitcoin's long-term growth rate? What would be kind of my question?
Yeah, I'll start with what's really unique about the preferreds, because of their non-dilutive nature, is if we were to go raise, and we have done with STRK and STRF and STRD, we raise capital and we buy Bitcoin, the same day. Let's say, we issue $1 billion of STRD, which we did, and we raise $1 billion of capital and we buy $1 billion of Bitcoin, right? And we were to pay every single year $100 million roughly, but as STRD increases in price, less than that on a relative basis, the price of Bitcoin doesn't have to go up. Right, we've already captured the $1 billion of Bitcoin value, Bitcoin gain day one, right? And so you don't need Bitcoin to grow 20, 30% a year. In fact, if Bitcoin price declines, we still already accreted value to the shareholder, right? And so I'll start with that. And that's I don't know that everyone quite understands that. If you capture the gain up front, anything that happens with Bitcoin price in the future is just further, it's gravy on top, but not required. Right. And in fact, if Bitcoin declines, and we talked about this in one of our earnings calls, you still have accreted value to the shareholder with an instrument like STRD, which is one of the beautiful things with it. So let's start with that as the base case. But of course, if Bitcoin price goes up, you're accreting even more value to the shareholder, right? That's what happened between the end of Q1, right, March 31st, 2025, and June 30th, 2025, is we showed basically a $14 billion increase in our Bitcoin value, right? And even maybe more interestingly is we went from $40 billion of Bitcoin on our balance sheet to $60 billion of Bitcoin on our balance sheet in the course of one quarter, right? So that's a company increasing its balance sheet $14 billion or $20 billion and increasing our income statement $14 billion. Companies don't do that, right? That puts us in our top 10% of companies out there. So yes, Bitcoin going up, not top 10%, top 10 of companies in the US, right? So yes, Bitcoin prices going up is a good thing, but not necessarily needed for our preferred instruments to work, right? Because we're capturing the value up front. Now, why do we think Bitcoin price is going to go up? I mean, a lot of folks have talked about this over time, but there's clearly a supply-demand equation there. We see what's happening initially with retail adoption. I talked about that. Then corporate adoption, then nation state adoption, now Bitcoin Treasury company adoption. I think one of the more interesting announcements in the last week was Figma, who we're a customer of. They have great software for creative design and development. People love Figma. Puts out there in their S1 as they're filing for an IPO. That lo and behold, they have about 5% of their balance sheet in Bitcoin, right? And here's a private company, not trying to be a Bitcoin treasury company, right? But realizes the thing that we realized in 2020, that Bitcoin on your balance sheet is better than cash on your balance sheet. And, you can be upset. People are upset. It's like, why only 5%? They're not trying to be a Bitcoin treasury company. They're just trying to make smart capital allocation decisions. And they decided, and these guys are brilliant. If you ever use their software, our marketers love their software. Like, it's so much better than using, everything else out there. I won't name their competitor, right? And that's the part that hasn't even started yet, right? Like corporations who are not Bitcoin treasury companies deciding that they should put a portion of their balance sheet into Bitcoin, right? And I hear all the time, well, when is Apple going to flip their $150 billion to Bitcoin. And Mike said it, you said others said it, probably no time probably not in our lifetimes, maybe the next 20 years they'll realize it, but we don't need them to do that. We need them to do what Figma did and put 5%, put $10 billion, $7.5, $10 billion on their balance sheet in Bitcoin. And if they would do so, they would be the third largest holder of Bitcoin in the world. And so I guess it's a long way of saying we're still early. We're seeing the wave of Bitcoin Treasury companies now. I think what you're going to see in the next year to 2 years is the wave of traditional companies putting Bitcoin on their balance sheet. Not as like what Strategy has done or Metaplanet's done, or Semler has done, but just as a way to diversify and their balance sheets in general.
And looking in the short term, do you factor into your the decision making and strategy the macro outlook, or is it pretty agnostic of, well, you don't have a view on whether rates are going to be cut this year or not?
We buy as much Bitcoin as we think is responsible by raising as much money as we think is responsible. And I don't think we try to time the market and rate cuts and macroeconomics, et cetera. I think, frankly, that's tough. Like when is the Fed going to cut its rates? There's like 50 banks and 50 macroeconomists, and they get it right 50% of the time and wrong 50% of the time. I might as well flip a coin. That's that's tough to do, is to try to predict what's happening. And then what happens, right? Like, there's some major war or pandemic or some other, asteroid hits like, the Earth. I don't want any of these things to happen. Their rate cuts change and your timing changes and everything changes. The nice thing is, no matter what happens, Bitcoin will do well.
Right. All right. Well, I've got one last question for you, which I think a lot of people have been discussing recently, is index inclusion, which is that with the rise of passive investing, lots of passive money flows go into indices. How important do you think index inclusion is to strategies, capital markets activities going forward?
I think it's important. I don't think it's necessary for us to see positive movement and success in our equity, but I think it's good for it's good for the market, right? It's good for Bitcoin. I'll start with that, right? Having Coinbase included in the S&P 500 was great, right? Having Strategy included in the NASDAQ 100 was great for Bitcoin, right? And great for the market awareness of Bitcoin. Frankly, I think it's good for investors, right? A lot of the NASDAQ 100, S&P 500 attract a lot of passive investment in passive capital. And so we know that the returns on assets that are tied to Bitcoin outperform the market, outperform the Mag 7, outperform the S&P 500, the NASDAQ 100. So I think it's good for investors. And I think it's good for the S&P and it's good for the NASDAQ, right? It's good marketing, right? Like, we want to get rated by the S&P, and the folks there know that they understand that these are pools of capital that they can access, and pools of customers they can access that they otherwise wouldn't, that have interest in Bitcoin, right? And they realize that people who have an interest in Bitcoin tend to be, intelligent technologists with lots of money, right? Why wouldn't S&P want access to that? Ultimately, they're a business. They're a $250 billion market cap business, and they realize that inclusion would be good for them and rating would be good for them. So I think it's good. It's good for Bitcoin. It's good for the markets. It's good for individuals. It's good for institutions, and it's good for the agencies. And then it's just a matter of when, right? I think the fact that they included Coinbase is very bullish, and kudos to those guys for doing that. And I think it'd be great when we get included.
All right. Well, thank you so much, Phong, for coming on the show. I really enjoyed our conversation, and thank you to you and Mr. Saylor and the whole strategy team for really breaking the ice in capital markets and bringing Bitcoin exposure to so many investors who otherwise wouldn't have access to it. So thank you again for coming on. And we look forward to having you back on in the future.
Yeah, it's been a terrific ride. It's been a lot of fun. And so thank you for the conversation and for Bitcoin Magazine and all the work that you're doing.